Good morning. It is Tuesday, January 16th, 2024. It's 10:45 a.m. on the East Coast, and this is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca, and at Goldfinger Capital on YouTube. And it's a pleasure to be with you here this morning. A lot to get to, as always. I'm going to zoom through some topics to spend some more time on the more important topics. But let's just say that the new year is off to a start. There is some positive news out there, especially in the junior mining sector. Some companies are getting some love early in the new year. Other companies not getting much of anything. So it's definitely a mixed bag, but the news flow is definitely starting to pick up. And I expect it will pick up a lot more over the coming days as conference week in Vancouver begins. So conference week basically starts on Friday and goes for about a week. Starts with the Metals Investor Forum Friday and Saturday, and then the VRIC, which is a very big conference in Vancouver at the Canada Place Convention Center there, downtown Vancouver. That's Sunday and Monday, and then AME Roundup is on I think Monday, Tuesday, Wednesday, might even go to Thursday, I'm not sure. But anyway, it's a full week of conferences in Vancouver, so a lot of activity, and we will get a lot of news flow from companies. But starting with the bigger picture, broader market, it's also earnings reporting season. So it kicked off today with Morgan Stanley and Goldman Sachs. Morgan Stanley got hit a little bit on their report, down about 3.6% so far. Goldman was unchanged the last I checked, but this is just the start of the season. It really picks up next week with big mega cap tech like Netflix, Intel, and Tesla all reporting next week, and the market will definitely pay a lot of attention to those. We also have a Fed meeting and announcement coming up at the end of this month in 2 weeks, and I'll get into a little bit more about that later when we talk about gold. As far as the broader market, like the S&P 500, basically treading water, marking time so far the first couple of weeks of the year. We were trading quite a bit lower earlier in the session. Markets have rallied back, but nothing, in my estimation, none of this action so far in the new year is meaningful. I feel like those first 2 to 3 days of the year where we saw some pretty good selling, that was just people booking gains in the new year that they won't have to pay a tax bill on for another 365 days. I think it was just rebalancing. I don't think there was anything more to it. And we're basically trading at the same level in the S&P as we were in the final week of 2023. Some individual stocks like Tesla have been hit much harder than the big indexes. Tesla dropping from about 250 down to a low of 212 here this morning, but rebounding sharply right now and now up 1.2% on the session. Tesla looks like it's pretty oversold to me, and this could be a nice bounce setup into earnings report next week, but definitely caution holding any stock into the earnings. The earnings report could be a very volatile response, but right now I think it's set up for a rebound over the next few days. Another sector that stood out to me were the airlines on Friday, and American Airlines, Delta Airlines, all the airlines were getting smoked, down 9, 10, 11% across the board. And that was just because Delta cut its full year profit outlook for 2024. So they're just seeing higher costs of running their business. They basically primarily blamed wages, that they've had to raise pay for their employees and their pilots. The market seems surprised by it. I feel like we've heard a lot about wage increases for the last couple of years, so it's a bit baffling. But maybe that was just the company making an excuse for a bigger issue. I don't know. The market didn't like it though, and the airlines had rebounded pretty nicely at the end of 2023, but now maybe they're about to roll over again. And I would definitely view the airlines as a leading indicator of the economy. I mean, they basically uh, give you a very good snapshot of how wealthy, how comfortable people are feeling financially, and also how much business activity is going, on. So far, the last couple of trading sessions not looking too good from the airlines. Um, just getting back to the S&P 500, it's way too early to call this a double top. Maybe you look at it on an hourly chart, it looks a little more like a promising double top, but this is far from it. And I love, all these people love to point out the bearish RSI divergence. Well, this is what the RSI does when a market is consolidating near its highs. The RSI falls. That's just the nature of the way the indicator works. So there's nothing bearish, quote unquote, about the way this RSI is behaving or how price is behaving in the S&P 500. Let's talk about commodities, let's talk about the dollar first, and then commodities. So the euro USD back under 109, and this is interesting because technically this looks pretty bearish now. Okay, this doesn't look great in the euro dollar. You have like this bear flag pattern the first couple of weeks of the year. Again, not scientifically drawn, just doing this on the fly. And then we break lower here today. Not great, not great. But 108.50 is definitely a big area of support. So far, the session low was 108.66. I think we give the benefit of the doubt to the uptrend for now, but 108.50 is a really important, support level. The way that it traded the final days of 2023 with this bearish engulfing and then the gap down to start the new year, and then sort of like this bear flag and another gap lower, not great. But I would add more weight to the longer term trend and the support at 108.50. But the euro USD is definitely one to watch because that is starting off the year with a very bearish flavor to it. And a lot of times, we hear about the sort of the January effect in the euro dollar. And usually January, we will see the euro dollar pair, the biggest currency cross in the world, make a higher low for the year in January. So we have to be asking ourselves, is this going to be a low for the year or is it going to be a high for the year? And again, that doesn't always work, but it's something to think about. So metals, gold has been marking time. It's down a little bit today, but there's nothing remarkable about the price action in gold. Support did hold at 2020 last week. We got a little bit of a bounce off that, but now we've seen some selling pressure come back in as the dollar has gotten stronger. That dollar gold inverse correlation is working pretty well here to start the new year. One metal, which is a bit of a conundrum to me right now, is copper and how weak copper has been trading. We're starting to hear things about stimulus in China. We're starting to hear things about low copper inventories in China, low copper cathode inventories in China. And again, we have the probability, whether it's 60-40 or 70-30, the probability of a rate cut coming from the Fed in March. So you would think that those would add up to a bullish tailwind for copper, but so far it has not. So copper is being weighed down by something. I have to figure out what exactly is going on here, but when I look out over the horizon, let's say past March, past April, into the second half of 2024, the supply picture is really underwhelming. And if China decides to restock, build up its inventories again, then I can't see how copper doesn't go soaring past $4 a pound again. But right now, it's a bit of a conundrum. Why is it so weak? Is it telling us something bigger about the global economy, what's going on out there? Okay, so it's something to think about and ponder over the coming days. Again, gold, the 2020 level is a very important key support level. Right now, this morning, we're trading about 2043 as I state these words. 2045 actually. So came back a little bit. We're seeing a little bit of a bounce out there. And a lot of questions about what moves gold. I believe that some people have a misconception about what drives the gold price. A lot there's a say gold is a fear trade. Gold is a fear trade. Okay, maybe in some sense, but really, I would say gold is a confidence trade or lack of confidence in central bank monetary policy and the global financial system, and the ability of fiat currency to hold its purchasing power over time. I would say gold is more of a trade on those things than fear trade. Like, what is fear exactly? I mean, fear of what? But the most important thing that gold is, it's a monetary metal. So it absolutely, number one driver of gold is central bank monetary policy moves and movements in global currencies and inflation rates. It is a monetary metal, first and foremost. Okay. And by the way, this is my new Substack, Goldfinger Capital. Please subscribe to it. There's a free version, and then there's also a paid version where you can pay $80 a year to get all of my premium writing. Okay. But please just sign up. If you don't want to pay the 80 yet, that's fine. But sign up for the free version and at least get some of my content and some of the teasers to more paid content. I'd appreciate that. I'm subscribed. And yeah, I mean, so we have like this, whatever's going on in the Middle East, right? I mean, obviously, Israel is in Gaza, just raising the earth. Whatever the Houthi rebels in Yemen are doing, they're, being a disrupting force for global trade and transit through the Red Sea. And then the US and the UK bombs some of the targets inside of Yemen to sort of make them pay a price for their behavior. And, what is gold doing during this time? It's basically trading nowhere. 2035, 2040. It's not being moved by the Houthis. And somebody told me, well, the reason why gold did this rebound in October was because of the Hamas attack in Israel and the fact there was a war going on. Absolutely not. The Israel, Hamas thing. First of all, gold moved the Friday before that attack happened. It had this bottoming candlestick. Gold was smelling out the shift in Fed monetary policy stance, where they went from, in early October, we could still have another rate hike this year, to by just a month ago to no more rate hikes and we might start cutting soon, right? Gold sniffed that out. The market sniffed that out. The Israeli invasion of Gaza headlines and whatever other saber rattling was going on in the Middle East was a sideshow. That if it impacted gold price movements at all, it might have done it for an hour or 2 hours on a given trading session, but I believe it had no net effect on the gold price in the last 3 months. This is all being driven by perceived changes in monetary policy stances and a continued bid in gold from the east. I'm gonna show you one slide from my presentation I'm going to do at Metals Investor Forum, and it's this one: the bull case for gold. Deglobalization and declining trust globally. Declining trust. So what does that mean? There's less trust in the status quo, the way the system has operated for 30, 40, 50 years. And countries are onshoring, reshoring their reserves, right? China's diversifying its foreign exchange, reserves into gold. That's one of the asset classes that it's using to diversify its risk, essentially. More trust equals globalization in the US dollar global reserve system. Less trust equals deglobalization, de-dollarization, and onshoring of reserves. De-dollarization gaining momentum as more and more countries choose to settle trade in currencies other than the dollar. And gold is being transferred from the west to the east. The rise of the Shanghai Gold Exchange. So a lot of people have been asking, why has gold traded so well while real yields have gone more positive? And I think a lot of that has to do with the fact that the gold price is being set more and more in the east, not in the west. So we focus on the US Treasury, yield curve in the west, but the real buying momentum and accumulation is happening in China and in the east. And there's other countries too that are adding much smaller amounts of gold to their stockpile than China is, but still there is a big amount of net central bank buying in gold. And this correlation between real yields and gold has broken. And I believe it's broken in a very bullish way. You could not see this big of a decorrelation, between two things and not have it be very meaningful, right? And the market price is telling us something about what's to come, okay? And I think we really need to pay attention to that, Gold is sending a message. At a time, 2022 and 2023, the Fed hiked more than 500 basis points. The M2 supply of money fell through the floor, and gold made a new all-time high. Really think about that. The most aggressive Fed tightening cycle in more than 40 years. In more than 40 years, real yields go sharply positive, and gold made a new all-time high just a month ago, above $2,100 an ounce, right? Those three things shouldn't go together normally, but things are changing in a big way. And the price of gold is being set more in the East today than ever before, okay? Oil is also a bit of a conundrum. The fact that oil, let's just pull up the oil chart real quick, because we've got all this Middle East stuff, right? We've got the Houthis causing chaos, right? At least that's what we read on the news, and the risk of, the Straits of Hormuz being shut down or whatever, right? There's a lot of fear in the headlines, in the media headlines. There's a lot of fear. And Yemen is next to Saudi Arabia. So all of this should be very bullish for oil, right? But look at what oil's doing. It's going nowhere, $72 a barrel. So I think that people who think that gold moves on terrorism headlines are delusional. Okay, delusional. Oil, the situation in the Middle East right now is probably the worst it's been in a decade or more. And look at what oil's doing, right? So the Houthis are not putting the bid into gold. China's putting the bid into gold. Russia's putting the bid into gold. Okay, it's not the Houthis and the fact they shot a missile at a ship in the Red Sea. Okay, that's just not how it is. If anything, the Houthis should be lifting the oil price, and they're not. They're not. Okay. So anyway, enough of that. Copper, gold, oil, S&P, Tesla, my Substack. Please subscribe. I am gold. Standout performer in the gold mining sector. So GDX not doing great to start 2024. It's down a few percent. Well, we want to look for relative performance, relative strength. IAG is up year to date, 260 a share, up. It had an incredible trading session on Friday, up. So the IM Gold is telling us that it is a outperformer in this early first couple of weeks of 2024. IM Gold is diverging from the rest of its sector, its peer group. That is bullish. That's bullish. So IM Gold, look back to previous weekly videos. I discussed IM Gold in more detail on a couple of them. But long story short, they have a ramp up of commercial production at their Cote Lake mine in northern Ontario. That's a big catalyst. And they report earnings next month. So we'll get a big update from IM Gold. Seems like somebody's beginning to accumulate this one ahead of that. Please do your own due diligence. Gold mining is a risky sector, but I like IM Gold and I like this relative performance, this outperformance here. Okay. Now, junior mining news. Canada Nickel. Haven't talked about this one a lot lately. Okay, it's trading down today, but it's had a tremendous run. I mean, just look at this run it's had from the November low. It's more than doubled. I think probably up almost 150% from the November low to this morning's high. And it kind of was beginning to get a bit parabolic here this morning. But the reason for the big move is two strategic investors have come on board in the last few weeks. First, it was big gold mining company, AEM, okay, the biggest mining operator in Canada, takes 12% stake in Canada Nickel. Why would a gold producer want to become a 12% shareholder in a base metals junior, right? And then Samsung, big multinational, multi-billion-dollar company, also comes in for an almost 9% stake in Canada Nickel. What is going on here? Three strategic. So they had Anglo American already from earlier in 2023. Then they got, Agnico Eagle, big gold miner. And now they got Samsung. Three strategic investors own, I don't know what it is off the top of my head, but I would say, let's say 30% or a little more than 30% of the company. Seems like a really big deal. You have some competitive tension building here in Canada Nickel. So what are they seeing here? They must be seeing that Crawford and the entire satellite property package that CNC has accumulated in the Timmins area of Ontario, they see a future here. They see a future for the production of battery metals. And, I think the carbon sequestration angle of the CNC story isn't well understood. And I don't even fully understand it. But I have a feeling that this is a big part of why these companies are coming in here and why they see a future. But honestly, I really don't know. I don't know. I'm not sure anybody knows fully how this plays out, but you have three strategic investors all taking notable stakes in the same company. It draws attention to it. Now, Canada Nickel's had a big run. Just in the new year, it's gone from $1.10 to over 220. So I'm not recommending it. I'm not making this video to say it's time to chase this. I just like to draw your attention to the importance of this news and for you to do your own research and form your own opinion on what's going on there in Timmins. So Canada Nickel, and then Hercules Silver. So yesterday I did this X space with Chris Paul, CEO of Hercules Silver. It was fantastically well attended. We had 600 people on live on X for a junior mining CEO. Okay. I don't know how many spaces I've done with junior mining CEOs over the last couple of years, but it's got to be at least a couple dozen. The usual turnout is 15, 20, maybe 30 people is a good turnout. We had 600 for Chris Paul. Now, they weren't necessarily all on at the same time, but throughout the hour and 13-minute conversation, 600 people logged into the space, okay? And you can see the views here, okay, the impressions, I guess is the better way to call it, over 14,000 just on the recording. I don't know what all the latest numbers are, but it's in the thousands. Thousands of people have already listened to this interview, this conversation I had with him yesterday. So clearly, a lot of people are still very interested in Hercules Silver. Now, the stock's 83 cents. I think it traded up to as high of 90 cents, yesterday. Some people said, oh, did the space cause the price to move? I don't know. There were some other companies, yesterday, base metals explorers like Aston Bay that were up 30%, 35%. I think it was a good day for the junior sector overall. Maybe listening to Chris speak gave some other investors some confidence that they were willing to add to their holdings. I don't know. I don't know. My overall takeaway from it was very positive. I am a shareholder of Hercules Silver, and I think the conversation on net cleared up a lot of details, a lot of maybe things that people were speculating on for the last couple of months. So definitely listen to it for yourself if you're interested in Hercules Silver. But I'm just going to give you my bare bones basic takeaways. He acknowledged that the four deeper holes they've reported to date have this nice layer of bornite closer to the surface. So in the upper part of the holes, I don't know, call it 200 meters, 250 meters, 300 meters, but in the upper, let's say third of some of these holes, you have this bornite where there's more visible bornite, where the bornite is bringing in higher copper grades. We saw that in hole 21. We saw that in hole 5. And, he's like, we're still figuring out what's going on here. Why is that sort of better part near to surface, right? Like what's going on with this porphyry that has caused this bornite to be closer to surface? And, quote that I pulled out, we want to get the nice upper part of the porphyry, but we want to get away from the red conglomerate that doesn't really carry the copper, right? We want to see where this upper part that has the bornite dips away from the red conglomerate. And basically he says they're making a new model in Leapfrog to figure out where the upper bornite is likely to be preserved, so not eroded away. And the early indications, there's still more modeling to do. They haven't even fully completed the 3D IP, the deeper, bigger 3D IP, but the trend is to the northwest. So the kind of the takeaway, if you want to just cut through the geo talk, the takeaways, the trend is to the northwest. And also, he made it clear that they're very much operating on this model, this porphyry model of a mushroom, where you have the mushroom cap, the upper part, the top part, and then you have the stalk, okay? And he said multiple times that like holes 11, holes 21, even hole 5 have only just grazed, maybe tapped into the edge of the cap. So where is it? Is it here? Is it here? But basically, they're not in this meaty part, the core, the potassic core. They have not tapped into that. They're on the edges of the cap. Okay. And again, this model is just one of many different models that you can pull up for how porphyry might look. And I'm sure the Hercules porphyry doesn't look exactly like this one. This is just showing for the purposes of having some sort of, like an illustration to give you an idea of what it's talking about, So the drilling to date is somewhere in this part. Okay, in this part, it could be over here. Maybe some of them are in here, but it's not in this potassic sweet spot, higher grade, more juicy, deeper center of the porphyry. Okay, and it's very clear that they have not figured this thing out yet. It is a puzzle. It is a puzzle, a work in progress. Again, listen to the interview for yourself. I'm not going to rehash everything, but the fact that they have Barrick on their team, and Barrick has a guy who is a super expert at formulating these 3D IP models and figuring out the targeting. Okay, I'm just going to I think his name is Lee Sampson, world-class expert. So, Hercules is in good hands here. And I'm very optimistic that they're going to figure this out. And, he said, we have some very compelling, high priority drill targets based upon the new IP. But I can't tell you yet because we're not finished with it. And there's some competitive tension in terms of staking in the area. So that's something to look forward to. But again, please listen to it yourself if you're interested. One point that I think I'm not totally clear on is where the new staking occurred exactly. I mean, it says to the north. So to the north could be anywhere around here. I don't, it could be over here. It could be up here. It could be, I don't know. But if this is the area they've been drilling, and the trend is to the northwest, well, I don't know. I mean, is it trending this northwest? Is it trending this northwest? Is it trending this northwest? We don't know. Okay. I'm just speculating. Obviously, there are some property boundaries over here as you step out further. I think at one point in the conversation, he said basically we have about 1,000 meters from hole 5 to a property boundary. And I would assume he's talking about over this way. And who has this? I don't know. What is over here? I see there's a state highway. See there's a power line. Don't know. So those are for a later date. I'm sure somebody's going to be trying to figure out the answers to those. Yeah. And one more thing. So hole 26, another little nugget from the conversation is like these holes, 2305, 2308, 2311, 2325, 2321, these were like preset as part of the drill plan at the start of the drill season. The only one where they called an audible, they changed the plan, was hole 26. So they changed where hole 26 was being drilled based upon the information they had from earlier holes. So this will be interesting to see what comes of 23, 26. But at the same time that, he said that they called an audible and this was drilled based upon what they were seeing in other holes, he still continued to say, we're thinking it's trending northwest. So if this is 2305, 2326 is south of 2305. So that's not northwest. So a little puzzling. Is 2326 going to be better than 2321? Is it going to be worse? Is it going to be like 2308? No idea. I have no idea what 2326 is going to be like. But the fact that he's clearly saying we're interpreting that the better parts are to the northwest, that would lead me to conclude that 2326 is not as good as 2305. But I'm just guessing here, spitballing. But we'll find out. He said that he wants to get that out, the assays for 2326 next week. So we will see. Okay, enough about Hercules Silver. Enough about Canada Nickel. The chart, this is just biding time here, and the island top is still there. It's still there. Captain Obvious can see that pattern in the Hercules chart, right? It's still there. BIG needs to get back above $1 to set in motion what I would say would be like a short squeeze or maybe some momentum buying. Right now, technically, this is just range bound, and that big island top is still looming ominously overhead. But we will see, because at the end of the day, this is a puzzle that's being figured out, and one drill hole can change everything, both in a good way or in a bad way. I want to mention my end of 2023 tax loss picks. So 2 companies on the list, Aston Bay, Aurion Resources. So here's that article that I published December 5th. Please read the intro to it because it gives you some important information, what this list is for and what it's about. But I do want to point out that Aston Bay on the list at 6 cents. And yesterday it traded to 11 cents. So Bay almost up 100% just so far in January. And I want to make the point that is one of the concepts of this list every year, is the January lift in stocks that were beaten down badly at the end of the prior year due to tax loss selling. So Bay, another one is WEX, are showing you that the selling pressure lifted as the calendar turned to the new year 2024, and the stocks share prices are lifting. WEX trading up almost 90 cents. I put on the list at 66, I think. Aston Bay on the list at 6 cents in early December and trading 11 yesterday, 10 cents today. I don't see any news from Aston Bay. So this is just something else is driving this move, maybe speculation about 2024 drilling, maybe speculation about a resource for the near surface copper at Storm. I don't know. There's nothing out there, but clearly there is some buying interest here. And this is the point of this list I put out every year. If you use it the right way, it works very, very well. You could have bought Bay at 6 cents in December. You could have sold it at 11 cents yesterday. Just saying. Not a trade recommendation, just saying the opportunity was there. Okay. And then the other one is Aurion Resources. Aurion Resources is a sponsor of Goldfinger Capital. I'm a shareholder and I am biased. Aurion had news out this morning from their Aurion-B2 Gold JV. this southeastern area of the JV called Vuoma. Aurion has 30% stake in this area. A B2 Gold, a major gold company, has 70%. And their results are continuing to hit gold in almost every hole. In fact, they were 4 for 4 in the holes reported here this morning, including the headline interval 28.64 grams per ton gold over 4.9 meters, including 126 grams over 1.1 meters. So bonanza grades there over 1.1 meters. And this was 540 meters from a hole that made this new discovery last year. So clearly, there's a lot of gold in this area of the property. The company notes is further evidence of gold prospectivity along the mainly untested southern domain battery that extends 15 kilometers to the Karaselka prospect on a property that's 100% owned by Aurion. So, positive news. I don't think 1.1 meters of 126 grams is going to set the world on fire for for AU at this point, but it is continuing to add positive news to the story and prove out that they're in an area of this property that has a lot of gold. And so the evidence has them plan a 10,000 meter diamond core program for 2024, $7 million budget, and Aurion is fully financed to contribute its 30% share of that. So multiple targets to be tested, including the structural 10 between the Helmy discovery and Rupert's 4 million ounce Ikari project, which is probably at the end of the day more than 4 million ounces. It's probably 5, 6, 7 million ounces. When it's all said and done, it's very, very, very big, impressive gold deposit just across the property boundary from Helmy. So in my mind, the Aurion story is still very much alive and well. This is positive news, but again, the market probably wants to see something from Aurion's 100% owned properties. But definitely this JV gives a lot of value to Aurion just because of the results there to date are quite compelling, and its location adjacent to, Rupert's multi-million ounce gold project there in the central Lapland gold region of Finland. That's it. So that's it for me today. Vancouver conference week over the coming week, and I'll be there and I'll fill you in on what I learned in Vancouver. So hope you have a powerful trading day and a powerful trading week, and be well. Thank you for tuning in. And again, if you enjoyed this video, please hit the like button and subscribe to Goldfinger Capital on YouTube.